Hello friends. In the first set of videos, we're going to talk about gold. Gold as an investment. Is gold a good investment? What are the different ways of buying gold in India? And if you're investing 1 lakh in gold right now, how much of returns are you going to get in next 5 years? So these are the topics which we are going to cover today. So before we start the videos, a brief disclaimer, we are not financial experts, we are not investment experts. So while you watch this video, we request you to do adequate research and consult your financial advisor before making any such decisions. Now, what I have done is I have tried mapping the price of 10 gram of 24 karat gold for the last 50 years. So in 1971, 10 grams of 24 karat gold was 193, and in the next 10 years, that is in 1980, it multiplied by 7 times, and in the next 20 years, it didn't see a great increase and it reached for 4400, and by 2010, it reached 18,500 and it increased to 31,000 in 2012. It came down to 26,000 in 2015, and right now it is hovering around 50,000. The point here is, if you look at the last 50 years, gold has given a great returns. If you look at last 20 years, it has given an average return of 13.6%. And if you look at the last 10 years, it has given a return of 11.5%. Now, if you compare this with bank FD rates in the last 10-20 years, the maximum the bank FD rates have gone up is by around 10%, that too in very few banks. And mostly it hovered around 8% in between 2000 to 2010, and around 7% from 2011 to 2020. And right now it's around 5%. It's very low. So considering this, gold is an amazing investment. But wait, if you can invest in any form of gold, you will not get the same returns. So there are some issues with some of the uh, investments in gold. Some are good, some are not as good as the others. So let's look at what are those. First, these are the 6 ways of buying gold. Number one is gold jewelry. Number two, gold coin, bars, and bullion. Number three, digital gold. Number four, gold exchange traded funds or ETF. Number five, gold mutual funds. Number six, sovereign gold bonds. Now let's look at each of these methods one by one, their advantages and disadvantages. This may be a slightly longer video, so I'll try to put it up in two parts. Now, gold jewelry. So this is the most common form of gold, and you will never get a 24 karat gold as a jewelry because you cannot make jewels with 24 karat gold. So the highest form of purity you will get is 22 karat or 916, which they call 916 kdm. So the advantages are, it's very easy to buy and convert. It's very easy to put an old jewel and buy a new jewel. You can also place it as a collateral in financial institutions for loans. Next, there is an aesthetic sense attached with gold. So family traditions are attached to it. It is passed down from one generation to the next generation. It's the most common form of gold which people in India have. Now, if you look at the disadvantages, gold jewelry comes with a host of charges. The biggest ones are the wastages and the making charges, and it may reach up to 30%. Sorry, it may reach up to 30%. And in addition, if you're buying stone-studded jewelries, it may you'll have to pay the price of gold for a stone which is actually worthless. In addition, you have to pay 3% GST. Over and above that, if you're having considerable amount of gold, it has a risk of theft. And if you want to store it in the bank lockers, it is going to cost you. In addition, you may have to repolish it maybe once in a few years to ensure that it is brand new. So if you're investing say around a lakh in jewels, the actual investment would be considerably small because of the host of these charges. Now let's move on to the next one, so which is the gold coins, gold bars, and bullions. So here, unlike jewelry, you can still get 24 karat gold. You can also buy 22 karat gold. You can buy it from any jeweler. You can also buy it from banks and metals mining and trading corporation of India, which is a PSU. Now if you look at the advantages, so it is available in 24 karat as we had discussed earlier. It has much lesser making charges and wastages than jewelry, but it will still have charges. Let's look at what are those. It can also be kept as collateral in the banks and financial institutions for loans. But there is a caveat. Only gold coins up to 50 gram can be kept as collateral, and bullions are generally not accepted in banks as collateral. Now, if you look at the disadvantages, it will still have wastage and making charges to the tune of, say, 10%. So it may start from 2%, it may go on. On an average, you may see around 4 to 6% of wastage and making charges in coins. You still have to pay 3% GST. It still has the storage risk, theft, and bank locker charges if you think of storing in bank lockers. And as I had indicated earlier, your bullions are not accepted as collateral for loans in the banks. Now let's look at the next way of buying gold, which is digital gold. It's one of the latest forms of buying gold. You can buy it very easily. Number one, you can buy it from any of the online apps such as GPay, Amazon Pay, and Paytm. In addition, you can also buy it from investment platforms like Quera and Grow. Now, one important thing is that you can invest as low as 1 gram, which is not possible in jewelry or in coin or any other form of methodology. So when you invest in gold here, you will either buy a 99.9% or 19.5% gold depending on where you are buying from, and it is a 24 karat gold. It is bought and stored at three organizations. One, MMTC PAM. It's a JV between the Government of India undertaking and a Swiss company. And there are two private corporations from where you can buy gold, Safe Gold and Augmont. Now, what are the advantages? The advantages are you don't have to have the worry of storing it at your home or in the bank locker. It is safely stored in their vaults of these three companies. You can convert it into gold metal, but mind you, so here if you're buying for 1 rupee, 2 rupee, you can't convert it to gold metal. There is a minimum deliverable quantity, above which you will be able to convert it to gold. It's very easy to buy. You can make very small investments, and most importantly, there are no making charges, wastages. If it is not converted to a gold coin, if it is converted to a gold coin, you may incur some of the making charges. Now, what are the disadvantages? So, when you redeem it, there is a spread cost of 3% that is involved in insurance transaction and storage of the gold. Um, and next, so there is a limit to which you can hold this gold. So you cannot hold this digital gold in an infinite amount of time. So there is a cutoff period beyond which if you hold, the companies will apply charges and you'll have to pay them. It also has 3% GST, and when you're getting the gold delivered, you have to pay delivery charges. Uh, yeah, and you have to pay long-term and short-term capital gains tax in this form of gold. So it is also applicable in the previous forms which we discussed, but since we generally don't convert that into a money, since we don't directly sell it, so we have not spoken about it that there. Then it doesn't have any regulator. If you look at my other forms of gold like sovereign gold bond, where there is an RBI that is backing that, and Government of India, there are no regulators here. Now let's look at the next form of buying gold. Gold ETF, exchange traded fund. What is a ETF? You might have heard about Sensex, Nifty. So what are these? Nifty is an index of 50 companies where the shares are invested in a proportionate manner. For example, HDFC may have a 7 or 8%, Reliance may have a 7%. Similarly, so gold ETF invests in 24 karat gold, which is 99.5% gold. So you can buy gold ETF if you have a demat account through any of your brokers, and it's held in the demat form. So what are the advantages? Like other forms, you don't have any kinds of making charges, wastage, GST, nothing. It is very liquid. If you want to convert it to money, you can trade it in the market and you can get it converted to money. It can also be kept as collateral for loans and banks and financial institutions. Just in case if you want to convert this into gold metal, you can do it, but there is a minimum cutoff amount, which is 1 kg above which you can convert into metal. It is very safe. You don't have to worry about the storage risk. Now, what are the disadvantages? So, people who know about mutual funds know about this. There is an expense ratio of around 0.5% to 1%, which is levied by the fund houses that are managing these ETFs. So there are some gold ETF funds that are having an expense ratio of as low as 0.3%, but on an average it hovers around 0.5%. Here you'll have to pay long-term capital gains and short-term capital gains tax whichever is applicable in whichever income bracket you're coming. One disadvantage is that you cannot invest in a systematic investment plan that is an SIP format or like mutual funds. Here, hence, a slightly higher investment is required. The next form of investment is gold mutual funds. So what gold mutual funds does is like any other mutual fund, like other mutual funds invest, like equity mutual funds invest in stocks, it invests in gold ETFs. So here, what happens is that you still have the advantages of gold ETF. That is, there are no making charges, wastage, GST. It is highly liquid, more liquid than ETF. It is traded in higher volumes. It is safe from the risk of theft, and there is no storage cost, etc. But the disadvantages are: number one, it has a higher expense ratio because there is an expense ratio of the ETF plus the mutual fund houses expense ratio. So that would cost approximately a year 1 to 1.5 or 2%, depending on where you are buying this from. It will also have an income tax, which is a long term capital gains tax and short term capital gains tax according to your slab. And if there is a lock-in period with associated with gold mutual funds, and if you are selling that before that, you'll have to pay an exit load which ranges between 1% to 2%. All right, so now we will look at sovereign gold bonds and comparing all these types of gold buying methodologies, and we will decide which is best and what are our key takeaways in our next video. If you like this content, please give us a thumbs up and subscribe to our channel. If you felt this is useful for you and your family and friends, please feel free to share it with them. Thanks for watching.